What's up everybody, Tom here with another video. In today's video, we're discussing everything that you need to know for the markets for the week ahead, including the biggest news that's coming out, and of course, our technical analysis levels for the SP500, Nasdaq, Bitcoin, Apple, Tesla, and more. We're at a critical point here on the markets at a critical date that we've seen buy the dip action happening so many times over so many months. Will the bulls or the bears win this week out? We've got some critical levels that you need to be looking at. Stay tuned. This one's going to be good, guys. All right, well, one of the things that we like to do on this channel is to have a look at the week before to understand what might be happening for the week coming up. And when we take a look at this actual heat map for the weekly, you'll notice that overall, a lot of stocks were kind of mixed, and that things like Tesla actually were doing much better than you expect. Facebook and Apple came under a little bit of decline along with the rest of the FANG, and Microsoft in particular was up, but that's only because of the sneaky buyback that they obviously did. If we take a look at the Friday session, you'll notice straight away that Microsoft, Google, Facebook, Apple, they were the ones that took the beat down. And there's a good reason for this. I believe it was just basically the options expiration. We know that the quadruple witching event occurred. That's when all of the big major options expire at once, and that creates volatility. But notice what we have here on the charts. So we have a decline, we have further decline, stabilization coming into the end of the day, and then randomly a little bit of buying that happened near the close. So was that Wall Street saying, oh wait, we're going to play the date game, we've pulled it back to the 50 exponential on the S&P 500, and now we're going to start picking up the positions and trapping retail into a thought process. We'll take a look at that soon. We've also got here the sectors. In terms of the only good sector for the day, it was IBB and XLV, the healthcare and biotech sectors. Healthcare was doing okay, but XLK was not. So that's the big technology companies, and materials continues its slide. Materials, especially iron ore here in Australia, was getting bashed around a lot last week. So if you like deep value, you could always go look at those charts, but I'll tell you what, they haven't stopped falling yet. You just see it just like a falling knife. Very, very dangerous looking charts right now. Let's go look at the fear and greed index. No real updates here. 34. Remember, when extreme fear occurs and we're hitting technical support, that's when we want to be doing the Warren Buffett and we start thinking about maybe picking up positions. When there's extreme fear, we want to potentially be doing the opposite. When there's extreme greed, what do we want to do? Potentially be doing the opposite, scaling back out of our positions. Let's now take a look at a technical analysis and get into some of the key levels that you want to be looking at, plus our options discussion, because guess what? Wall Street did it again. They managed to literally expire the maximum amount of options, the perfect amount of options for them to make maximum money on the Friday quadruple session. Let's look at the VIX here, the fear index as many people call it. And it's at 20.8, basically where it closed the week before. We know that we're on a key level of support here, the 50 exponential moving average on the daily, and that is of course on the S&P 500. If we're on such an important support level, then what do we expect to happen if that support level is broken? The VIX will go nuts. The VIX will go back up to these 25 levels, 24, 25, and we expect it to be quite a lot of selling to occur. That's because once you get through a key technical zone, it creates what we call a participation phase. So if that was to occur this week, and there is definitely a case for both sides here, and we'll talk about it soon, then the VIX should spike. If it doesn't and it buys the dip, obviously the VIX will come back down, and we probably expect it to come down considerably and maybe even go back to that 16 level. So we don't really like trading the VIX, but it is interesting to see it above 20 because that usually means that the bears have a decent control of the markets at this stage. Let's take a look at the technicals. So straight away, you'll notice our favorite 50 exponential moving average on the SPY has been hit. Now, at this point, I'm going to ask everybody in the comment section, put your comment. Do you think this week is going to be positive or negative? I'm super interested to know what the community thinks. Let's see what the big brain traders out there and investors are doing this week in terms of this 50 exponential. Now, I want to bring up a date because this has happened almost every single time. Notice 19th of May, it buys the dip. 18th to 20th of June, it buys the dip. 16th to 19th, because remember there's a gap here over the weekend, 19th, it buys the dip. And then of course we've got 20th, 19th, 20th, it buys the dip, same level. And where are we now? 17th into what will be the 20th on open. And will we buy the dip? The only difference between every other time is every time it's been flash crashing into that date, this time it has been more sustained. So that means there's been a lot more thought process behind whatever Wall Street is up to, because it's like one day down, a little bit of a rally, trapping by the dip buyers, one day down, trap. And as we saw on the smaller time frames, if we actually go in here to the 1 hour chart, take a look at how many times it came back up for buy the dip action. It kept buying off this level that we discussed last week in the channel and bought up every single time, trapped people into buying calls, which continued to mount all of last week. I feel bad for people that were buying those calls. And then it wouldn't get underneath the 440 either, which was where all of the options expirations were. Remember, maximum pain was 440 had tons of options on it. Go back and watch our other videos if you don't recognize it. 450 was insane. 455 had crazy amounts of calls. So if they were able to close the position in here, what did they just do? They extracted the most amount of money from the options. And if we know that 70% of options expire worthless all the time, then this was an absolute cracker month for Wall Street. Expect some of those boffins having crayfish dinners and lunches now on our hard-earned money because of how well they did. I'm telling you what, they literally orchestrated it perfectly. Let's have a look at the options open interest strike for the week ahead to see if we can get any more information from it. It's not as clear as it was last week. You'll notice there are some calls around the 450, 455 kind of strikes, 452. You can check that out, or you can get this chart here, 7-day free trial, links down in the description below, fxevolution.com. Or if you want to, you can also go to Yahoo Options and look at the options open interest, because that will, of course, be something that you want to check out. You want to know where the key levels are. So this week, 430 for the SPY seems to be where the major puts are, and there's a little bit in the middle here. It's early to tell, not one of these major options expiration events. And then we have a little bit of calls sitting up at the top. So they'd still probably rather leave it in this range, but you'll notice that 430 is where the puts become a little bit more real. If we go through to October though, this is where things get interesting. Lots of small amounts of puts all over different strikes on the SPY, but still a huge amount of calls at 450. I would have it at a guess this is a lot of retail which had bought this with a month out. So remember, they'd bought it with 2 weeks out, 1 week out. Usually retail don't look past a month in options, maybe a month and a half. Very rarely do they do that. So this has got to be a huge amount of retail. Will the market stay low to make sure these guys earn no money? That's a very interesting theoretical that we can see there. If we move over to the QQQ, you'll notice it gets even more convoluted because we have puts and calls almost in equal value around current prices. And the amount of puts, because it's well known that the Nasdaq is weak during this time of year, is incredible. Look at this. Look how many puts are here. Crazy amounts of puts on the options expiration for October. So we have to be very careful if you're a bear here, because that's way too many puts there. They don't really want to pay them out if they can help it. So before we go back to the major indices, let's start taking a look at some other things here. Let's go into some of the stocks, because I think there's some interesting stuff to learn, and then we'll go back over to the Nasdaq, to, of course, the SPY, and look at the key levels for the week ahead. Let's move over to Tesla. So Tesla held, I think, phenomenally. And there's a few things that you should be happy about in Tesla. One, we have the 4-hour little long leg doji here, right at the resistance. We know this resistance is super key. It's about a 763 kind of resistance. And all the price action has been going bullish into this event. So what that means is that the price action has been very, very strong. Let's take a look at the weekly. So this is actually the first weekly that's closed, not wicked, but closed above the 742. We got a nasty looking bearish pin bar. Could almost look like a trap last week, followed by an incredible reversal. And this stock held up in a market that was going down. So does that show underlying bullish intentions? Well, we have a beautiful trend line that comes through on the 4-hour chart we've discussed. We've got a great closure above 742. There's no real reason to say, oh, I'm panicking in the Tesla trade right now, because things get even more weird when you start looking at the amount of puts that are being smashed onto Tesla. Take a look at this. This is the net between the positives and the negatives. This is next week, 24th of September. There are negative 16.35 million net puts sitting at $700. This $700 strike has become a fight between the bulls and the bears. And I'd encourage you to go and have a look at the actual amount of open options on these strikes, because the more puts that get chucked against Tesla, it kind of reminds me of every year except for recently, where there have just been so many puts smashed on it. And what did the stock do for years and years and years? It went up because it didn't want to pay these guys out. Remember, Tesla was one of the original gangster kind of massive amount of puts put on a stock saying this thing is going down, and it just never did. And that's usually what happens. If everyone believes something's going down, it generally does not do so. We had a lot of expiration also coming in on the 17th of September for the 750 strike, and that ended up getting paid out. So just a little bit, but it did get paid out. Very interesting stuff going in here. Algo flows all over the place because of the small amount of moves, so I wouldn't pay too much attention to that, but we do bring it up for you guys. And now we'll move over to Apple, because Apple did show negative. If we take a look here, we have a daily bullish hammer rejection, no follow through, key point. So remember, if you're ever trading a hammer, you need follow through. That means a new high is formed and it starts to show you that momentum's real. We then have another bullish movement up, and then we have this massive bearish candle that comes through and takes out the low. Surely this means that Apple is going to show further weakness, you would think. From a technical perspective, this chart looks weak. We've got rejections, we've got a closure underneath, and it's pointing towards that 141.50. So it's pointing right towards there, or even something even lower. But I think this support makes a lot of sense. What do you guys think about Apple? Do you reckon it's getting back down there? That's all we've got right now, but we'll be watching this one closely into our live session, which starts 1 hour before the New York Open. I think that's a cracker of a level, and we'll have to find out whether the bears really want to sell it off. Let's take a look at the 2 hour. What we'd probably expect is the market comes up a little bit, hits this level, and then finds some selling pressure. If they are there, they're going to be right around that zone, or at worst case, they're going to be trying to sell it back off here. So some interesting zones there for Apple in the week ahead. Let's take a look at AMC now. What is AMC doing? Well, AMC is basically a 2-day long leg doji. Notice the rejection up and the rejection down. What we then do is we go over the 2-day, and you'll notice there's the long leg doji. Why is that important? Because we know this type of candle, the community knows this candle, and it is indecision. We've got rejection wick, rejection wick, rejection wick. We finally get above that on the smaller time frames, move to our great resistance. Congratulations, everyone that's been following these levels. They've been doing quite well. And then we have the long leg doji. If we close above this, what do? We move back to the 52.35. If we close below this, what do? We move back to the $40. So that seems to be kind of the case for AMC this week. If we take a look at the algo flow, it was negative with the market. So that basically means that it was the big Wall Street guys and all the options flow and everything was really going in the same direction as the trend, which is consistent with what we've seen over the last couple of weeks. Before we go back to the indices, let's have a look at gold. Not much to really note here. It got underneath that 1782 support, closed straight back down to 1760, even went lower. And I think with such a bad weekly close as this, if we go and have a look at it, I mean, you wouldn't be remiss to think that gold could go all the way back down to 1678, 1679 support, so all the way back down here. The only thing I think with gold at this stage, other than some really good TA, is that if you put a vertical line on the start of every December, you'll notice that gold tends to have good rallies. So I think I might continue to cover gold on the channel, but realistically we'll cover it only when we get good levels, because at this stage, I mean, it just looks bearish to me. It doesn't look much greatness in the bullish side. And yeah, I don't really like trading stuff that's irrational like that. So when markets are bullish, I mean, if it got above 1830, hey, we're back in. But yeah, we'll keep looking at it when we can. Let's move over now to Bitcoin just before the indices, and we'll take a look at this. Bitcoin's doing exactly what we'd hoped it would do. And I posted this on the Twitter. I think it's fantastic, actually. And I know a lot of people say, well, why are you looking at it fantastic, Tom? It's not breaking to a new high yet. It's mostly because this is actually a perfect style Wyckoff event. So you've basically got your first low, few tests, your stop loss kind of hunt right here. Then you've closed above and you've consolidated some nice bullish buying that's occurred off this level. Now, obviously you get underneath these wicks, but that's not going to be good for it. But take a look at this price action. And then if you actually bring this price action against this, you'll notice they're very, very similar. You're getting that consolidation at the top, ready for phase E. And phase E should take us to 50, if not like a 52K level. So I'm pretty excited for Bitcoin at this stage. If we move over to BTC shorts, we're also not seeing the nasty whales coming to destroy us or to eat all of the plankton. They're not going to do it just yet. So when BTC shorts goes up, we have to pay attention. That means the whales are trying to short. That's the biggest holders of Bitcoin are really placing bets against the smaller plankton buyers like us. But at this point, nothing really too concerning that I'm seeing there. So let's move over back to the SP 500 and to, of course, the Nasdaq. And I want to bring up an interesting point. See how the SPX here is right on the 50. If we go over to the US futures, the US 500 futures, because they trade more, notice how it shows a close underneath. Never, and it's done it a few times as well, never fall into the trap of using the US 500 for your key levels. You can use it for your intraday trade, but don't use it for your key break levels, because even if this was correct in the future, you can see how many times it's been incorrect. Be very, very careful of using the US 500. It will give you a lot of false breakout signals. So you've just got to watch that and make sure you always come back over to the SPX or the SPY to get your real analysis. So we've closed right on the 50. We know the date is consistent with all the other pickups. So if the buyers are going to come in, they're going to come in here. We're obviously looking for little lightning bolts, smaller time frames, and we'll be very, very consistent with like 5 minute, 15 minute, 1 hour time frames earlier in the sessions for the week ahead. We've then got the big resistance that's here at the 44.90. So the 44.90 will be truly where the bulls have won back the market, and they go to push it to, you can only assume, probably all-time highs at that stage. We've got the Fed coming out, the FOMC's coming out, Jerome's coming out this week. We'll take a look at it in a second, but you can clearly see this is the war zone, and this is the zone we're looking at, and if we get back down, then we're looking at that kind of 43.70 level. See that level? Straight into that zone would be the next point of call. And if we go over to the SPY, you'll notice it's pretty consistent with the option strikes for the week ahead in terms of the puts as well. Let's move over to the QQQ and the Nasdaq. So QQQ closed underneath the previous little lows. It's come back and retested it straight away. I don't know if I'd short that straight away in the market open, but if you're brave, you could. Remember the dates and everything. You need that extra confirmation. We need the S&P 500 under the 50 to really begin that bearish sell-off if that's what you're looking for. If you're looking for bullish moves, you're looking for it to break back above, come back down, retest, move back into the resistance that we've got up here at the highs, and we've had that very consistently for the last week. And then, of course, if it gets through there, well, we're back onto the bull train. So lots of great levels, lots of potential trades here moving forward. We've got a great resistance and support levels here. 369 could be a great QQQ level as well. If it was to come back down, that'll be a zone people are watching. So there's so many great key levels to be looking at in the markets this week. I also want to take my time here just to remind everybody that we're in a market where it's been incredibly bullish. And that's not a bad thing, by the way. That's a good thing. It's been incredibly bullish for a reason. We're in month 7 of course, gains, or we were in month 7 in August, and we got that gain plastered on the chart. So basically what we're looking at now is a potential weaker month here. Now, if that weaker month occurs, what's happened in the past? Well, there's only been a few times that these types of rallies have ever happened. Generally, it's about 64%. The next month after that will be positive. You can see it's quite mixed across the board. But if we came back in 6 months' time, guess what? The market averages 7.9% up, 90, almost 3% of the time. So it shows you that the market is an optimistic beast, and you've got to be very careful when it comes to shorting. Be fast, be nimble, be quick, and make sure you always have proper risk management. FOMC coming out on Wednesday with their statement. Those pesky fellows, they'll be telling us what's going on. I'm sure they'll rock the market a little bit. Usually they do the right thing though. And Fed Chair Powell is obviously speaking as well on Friday session 10 a.m. So it's all about the Fed, the FOMC this week. What will they say? When will they taper? What will they talk about? I'm sure the market will move and be volatile around those events. Good luck to everybody out there. We wish you the best. And of course, if you enjoyed the video, remember to subscribe, smash that like button, guys. And remember, also tell us in the comments down below, will the market be bullish or bearish this week at the end? Tell us right now. Thanks so much, guys. Bye for now.